Hey everybody, it's Eric with Low VA Rates. Today we are going to talk about 3 things that you should know about VA loans this year, 2022. Now, while 2022 doesn't currently have any big bills in the works targeting aspects of the VA home loan program, there are still 3 things I want to talk about that I think you should know about the VA loan market in 2022. And we're going to cover all of them in this quick video. As you guys can tell, I'm wearing red. I do this every single Friday, so we're going to call this another Red Friday video. In summary, I wear red every Friday because I love the military, I love veterans, I love the USA. If you guys have the same sort of passion and love for military and patriotism, wear red every single Friday. There's even a video on our YouTube channel that tells you how we can send you some swag just like this. Go check it out. Speaking of red, down there in the bottom right corner of your screen is a subscribe button. We want you to like us, follow us, subscribe, whatever you have to do to stay in touch with us. You never know when you're going to need VA loan information, and I want to be right there in your pocket when you are ready. So let's talk about update number 1. I told you we're going to talk about 3 of these things today. Number 1 about the VA loan market in 2022 is, once again, as they have been for the last handful of years, VA loan limits have gone up, okay? Loan limits increased yet again. This is a good thing. It also means that housing costs in the United States continue to climb. We all know that. That's both good and bad. But in 2022, after the FHFA announced their updated conventional or conforming loan limits, VA released a circular that basically said we will also accept these limits. Now, while loan limits don't apply to borrowers using their VA benefits for the very first time or those who have fully restored their entitlement, these conforming loan limits do impact those of you who have partial entitlement. It's a whole nother conversation. We've got great videos out there about that. I will touch on it briefly. In general, the majority of the counties throughout this great country of ours now have a standard conforming loan limit of $647,200. I always find it funny. I'm sure there's a guru behind the scenes figuring out how in the world they're going to come up with it, but why not just a $647,000? Well, it's $647,200. Now, if you are buying or living in a county with a higher cost of living, the conforming loan limit may be as high as $970,800, okay? $970,800 in what we refer to as high-cost counties. Now, if you have partial entitlement and you're thinking about getting a VA loan this year, you're going to want to watch our video where we teach you about calculating entitlement, and that would just kind of be a refresher on how that can affect you. That video can be found, there's a link to it in the description box below. In addition, if you want to find out the exact loan limit for your county or any county that you're looking to buy in, we've also gone ahead and we've linked to the FHFA website in the video box below. Let's get into the second update for 2022. Okay, gonna clean off this whiteboard. Number 2 for 2022, rates are projected, unfortunately, to rise moderately as the Federal Reserve works to fight inflation. Now, at the end of 2021, we started to get really worried about inflation. If you watch the financial news or just turned on your local news, experts kind of knew, and those of us at the pump, they say, the consumer at the pump, we started to feel the cost of goods and services going higher. So far, the Fed, up until recently, the Fed has been doing a relatively decent job of keeping inflation low. When's the last time prior to the last 3 or 4 months that you've really heard anyone talk about inflation? Well, COVID changed all of that, okay? With massive bailouts and printing of money, interest rates were so low, it was the perfect storm for inflation to rear its ugly head. Now, one of the ways in which the Federal Reserve has to offset inflation, bring it down, is their federal funds rate, okay? The Fed rate, as some refer to it, is expected to go up little by little throughout this year. The Fed may actually have to be much more aggressive than they're currently talking about because inflation isn't seeming to go away. So what am I really trying to say? Rates are rising. in 2022. There's no way around that. Eventually, as the Fed continues to move that federal funds rate up, that's going to move mortgage rates up, credit card rates up, auto loan rates up. It makes it harder to borrow money or more expensive to borrow money. That starts to slow down spending. It starts to slow down the economy, and then your inflation starts to settle down. Again, not going to happen this year. The only thing that's going to happen this year is interest rates will continue to go up. And if you would like to go into more depth on the relationship between the mortgage interest rates and the federal funds rate, there's a video that we've linked in the description box below here where I went into this kind of, a year or two ago. But keep in mind, mortgage rates are going to continue to go up throughout 2022. Let's talk about the third and final update for 2022 that I'd like to share with you at least. And that is that VA cash out refinances are going to have their most popular year ever. They're going to be in more demand than they've been in a long time. And you're going to hear us talking a whole lot about cash out refis. Okay, that's going to be the hot VA loan, along with the purchase. But the real winner here in 2022 is going to be the cash out, because home values have skyrocketed. They went way up in 2020. They went way up in 2021, and they are projected, believe it or not, to continue this historic rise through 2022. That puts the VA cash out loan in a position to really take over the loan market. And that's because veteran homeowners are looking to tap into all of the extra cash that's now in their homes in the form of equity to pay off all of these debts. Your credit card interest rates are going to keep going up. Auto rates are usually pretty fixed, but a lot of your variable rates are going to keep going up as the Fed raises rates. You can tap into your cash out refinance and you can pay those debts off completely. You can also go out and make home improvements so that you can not have to go and buy a brand new home. Those things are so expensive right now, but you can update or upgrade your current home. Now, even though rates, as I just mentioned in number 2, are expected to rise, historically speaking, they are still going to be in a range that's much lower than they have been for many, many years. Not to mention, as I also suggested, no matter how high interest rates go, they will be a much lower rate than your alternative places for cash, which is generally bank loans or credit cards. If you need money, get it out of your home's equity. So if you have any questions about what you might qualify for under the VA loan limits that I just talked about for 2022, whether you have full entitlement or partial entitlement, we want to help you figure this out. We're here also if you just want to learn more about this VA cash out loan I've talked to you about. Make sure you give us a call. There's never an obligation, but you can consult with any of our expert VA loan officers who are licensed in the state that you're living or buying in, and you will enjoy those conversations. We love working with our veterans. We love every Friday wearing red. If you could look out into the floor here at Low VRH, you'd see a sea of red. Please join with us. Also, join me next Friday for another super valuable topic. Thanks for watching and have a great weekend.